So, should I start?
Yeah, yeah, please.
Good evening, everybody. Today we would be covering a comprehensive report on Solara Active Pharma. So, first, a brief introduction about what Solara is, how it came to existence, etc. Strides is the leading company in the pharmaceutical products market, and Solara is got demerged as a demerged segment from Strides, and mainly uh, the demerged segment that is Solara now is a pure play API and CRAMS company. Solara mainly deals in therapeutic APIs, and the largest portion of it is ibuprofen. Now, what ibuprofen is used for is mainly fever, pain, and inflammation, and this is the major source of revenue for Solara. Further, Solara's share in the past 1 month is traded to around from 378 to 382. It had a hike to around 400, but now came down to 382 with the all-time five-year high of 1,777. Company currently has six main manufacturing plants and two R&D segments centers, and sells its products in 75 plus countries with 60 plus commercial APIs and 10 plus under development. The company has been in the recovery stage, and since its change in business module in the Q3 FY22, and we would cover more on that in the forward slides. Main mission of Solara is to be a customer-centric organization delivering APIs of high quality with a REIT philosophy. The vision is to become a top 10 pure play global API company and to deliver significant value to its partners, shareholders, etc. In the chart below, you could see that there in the recent months there has been quite a high spikes in the volume of Solana, and this has raised major concerns from stock markets. Why? Because why is such a volume hike is present? And the reply from Solara for it is mainly that the company has disclosed all material information, and they even they don't know why there is such a hike. So yeah. As for a timeline, in 2018, Solara got demerged from Strides in March 2018 and further got listed in April that year. However, the incorporation for company happened in 2017 and but didn't begin major changes until March 18. In November that year, they started actively filing DMFs in China. Now, what a DMF is a drug master file. The drug master file is basically containing everything and anything about a drug, including its formulation and anything that could be uncovered under copyright, etc. And is done to a regulatory authority in the respective countries and is not subject to disclosure to the public. In 2019, there was a major infuse from TPG Capital, and they decided to infuse 460 crores INR over the period of next 18 months. This TPG funds was used in that year, May, to fund the Vizag plant, and this was one of the major aspects that has contributed a lot in company's downfall in the recent years. And the funds that the TPG funds were used for this. Further, in October that year, there was a issue on one of the Solara's top 10 products that use ranitidine, and this product got banned from US FDA, and all the products that were in the circulation were called back. This had a significant impact on company as well, and we would cover that in the risk segment. In 2020, there was a hike in stock price, but until mid-July, after which the company achieved its all-time high. And later that year, there was a new MD and CEO, Bharat Sesha. The old MD, Mr. Devendra, left the company for a year, citing the reason for his health concerns. However, he came back the subsequent year and has been managing the company and has been a leading force behind the company. In 2021, there was a major spike in the raw material prices due to COVID-19 pandemic. Further, there was a merger announced between Solara and Aurora. Now, Solara and Aurora are the person behind both the companies is Mr. Amit Kumar Pillai. Uh, yeah. So this is the guy who is the main guy behind Strides, main guy behind Solara, and the Aurora. He's one of those serial entrepreneurs, and as per his insights and discretion, there was a merger between the two companies. This was supposed to change the entire way the company does its business, and in that year as well, in the if you would see the quarter December 2022 FI report, the company changes strategy. Now the strategy change was basically company's entire model changing from a distribution model to direct consumer model. This led to a really high one-time callback of all the inventory. The reason the company gave for this major strategy change was that this would help them in long term, as well as help them in like overall managing the supply chain more efficiently. However, in the last 5 quarters, like in the last 2 quarters, the company has now started showing some profitability. So it like had a significant impact on the downfall of the company into loss making for a couple for like few quarters. In 2022, this merger that between Solara and Aror was announced got reversed, mainly due to the reason that Solara gave was that Aror didn't meet the financial expectations that they had set for the merger to go through. And the Vizag plant that was set back in May 29 got reversed, had like contributed nothing in the FY22 report, in the as per the FY2022 report. Now, the Vizag plant also had undergone some scrutiny, mainly because of the fact that there were one of its major consumers raised a flag on Vizag plant's overall quality and hygiene aspect, which led to USFDA launching a complete investigation on the plant and the entire plant shutting down for quite a while. We would also cover that in the risk segment. In November that year, the plant got CEP approval, and in 2023, recent reports cite that they have also achieved USFDA approval and are looking to achieve the historical levels of sales that they were achieving. Now, in 2023, the Vizag plant in Q4 is also estimated to break even, which is also a growth trigger for the company because it has been holding the company back significantly. A bit of an industrial aspect, China is the main API exporter, and due to like the geopolitical issues between India and China, the both the like Indian companies are trying to fill the gap between the API industry that has overcome. The According to a report, the CHR for API industries is around 8 to 10%, with some turbulence that like like are expected in the near future. There is also the usage of AI in the aspect. The product range for Solara, the main API that they have is ibuprofen, as mentioned in the previous slides, which is the main contributor of revenue. However, there are also other non-ibuprofen products like gabapentin, silver carbonate, and like Physokinil, but these are not major growth drivers for the company. As for the API, FY22 cited that there are 60 plus commercial API and 10 under development and 90 USDMF filings. And over like analyzing their con calls, they also mentioned that they have filed overall 5 more in the FY23. Their main expertise in anthelmintic, anti-malaria, anti-infective, and non-steroidal anti-inflammatory segments. And in 2022, they had 12 market extensions in 15 existing products. Before forensic analysis, there is another product range aspects. The company is also trading in the CRAMS segment. Now, what CRAMS is basically contract research and manufacturing for other companies. They provide their facilities as a base for the other companies to do outsourcing and then produce and supply back to those companies to like they basically produce their products. This whole segment is also one of the like growth triggers for the company, which would be covered later. Forensic score for the company was 12 by 23, which is 52.2, not a good score for like overall forensic check. First is the promoter ownership, that is around 40%, which is like not as per the like good measures. Now there is also 155 crores of holding by the main promoter, Mr. Arun Kumar Pillai. But this guy has been like a serial entrepreneur, and if you would see in the later stages that he also holds a lot of companies. So that is why I've given it a zero, because I don't expect that guy to have like just just because of 150 crores is tied in Solara to have the major skin in the game. There is also an aspect that recently, like on I guess 16 hours ago or so, the Solara announced that they had a non-executive director resign, so that might have some impact on the forensic overall list. But I haven't incorporated that in the screenshot, so there is that in mind that the score can go further down as well. Overall pledge share is 41%, which is really high. And the company in overall any con call or any other measure haven't given any clear guidance for why there is so much pledge shares. The only reason that they give is the uh, promoters having some personal reasons. That's why they have pledged around 41% of their overall stake. Total related party transaction to sales ratio is also 25.4 as per FY22 report, which is like slightly higher than the overall metric. Company does pay a 2 crore rent to one of its like promoter or KMP, which is why there is a zero here. The company does sell from its parent company, that is Strides, which has which was had like 118 crores of like overall transaction value and a total 250 crores in the RPT section for sales. Now, company also the Arrow is the company that they were supposed to merge with, and they also have a loan with them. They have like given like extended a loan to Arrow, which is like one of the promoter control entities that Mr. Arun he. So that's why it's also zero. Total net fixed assets to goodwill is also high. However, this is not a major flag because the overall API companies does have a lot of goodwill on their balance sheet, is like as per my understanding of the sector. Further, the other expenses as compared to like revenue were 23.49%, majority of which was the power and fuel and the price hikes that were mentioned in the previous slides. I have taken two competitors, IOL, which is a main ibuprofen leader in the industry, and Aarti Drugs, which is like Aarti Pharma Labs, which is like also one of the good players in the API segment, and the company has like the overall average exceeds the two of them. There are two factors that also were different, although they had a one score. The main is the auditor remuneration. The auditor remuneration for these companies were quite low, were not that high. However, Solara was in the like similar remuneration line. However, the sizes of the company does require further investigation on the topic. As I mentioned, in the recent years, that is FY22, the company was overall loss making, due to which that the I have taken 11.8 crores to be the FY22-21 figure, which was less than the PAT exceed of 11%. And in the recent year, the if you would see that the two figures have a like really major decline, so it's also a, like sort of a good factor that despite companies loss making, the all the directors have like almost one fourth their total remuneration. The manufacturing segment of the
Pratham,
company, yes.
sorry, one question. In the other expenses, what is Solara's figure? I think you forgot to mention that. Uh, it
Uh,
deviated by more than 5% from IOL and Aarti Pharma, but what was the percentage? Is it,
uh,
you mentioned somewhere, is it 25% other expense as percentage of revenue?
I guess let me just see if I would have mentioned in the forensic quality sheet.
Yeah,
If
I
not,
think
I
it,
would just mention that I
yeah,
skip.
yeah. I think in another point it was mentioned. Just want a confirmation there. I
It's
forget
not in
later.
the forensic. I would just
Okay,
get back that figure to you. I guess I forgot to
okay.
mention it.
All right. Yeah, no problem.
So yeah, continuing forward, the manufacturing segment, there is total of like eight flags on the like Indian map. There are six plants, that is Amrinath, Mangalore, and like all these. Visakhapatnam is the latest, that is the Vizag plant. There are two R&D facilities in Bangalore and Chennai. The Vizag had its like plant is in the latest expedition of the company and got a CEP and USFDA approval. In February, they also gained EU GMP certification for their Kodalur site. And in the overall capacity utilization was at 77% in FY22. This is XYZ. Now YZ plant is under like was under like really high scrutiny and was shut down. That is why the company gave a like XYZ figure. No major capex is expected in the current FY24 figure, FY24, except the 70-80 crores. That is also for just maintenance purposes. Solara has a global presence of like 68% is like Asia Pacific, and is like more or less concentrated in Europe and North America, South America, and rest of the world provides certain percentage. The overall revenue stood at 1268 crores, and the regulated markets gave 62% revenue in FY22, but this increase in 70% in FY23. The overall ownership structure of Solara is as follows. First, that the company had around 35 lakhs outstanding shares. Uh, 35 crores outstanding shares, and from which the promoter holding is 40.9%. And the second slide, I mentioned that there has been a hike in the overall volume. And this was like sort of proven by the fact that when analyzing the June 23 figures of the company, the overall promoter holding went down to 39.31. Directly or indirectly, Arun Kumar Pillai is the main promoter holder in the company, as you could see in the like overall number of entities that he holds. And if you would check the screener figures on who are the promoter side holders, you would see a lot of overlap in these entities. The summation of which was around 21%. As for FIs, there are some FIs from Ireland and UK that are holding less than 3% of the companies, but the cumulative figure is around 19.3%, which reduced to 18.71% in the June 23 report. The DIS stake also diluted from 7% to 2.75% since listing, and has now further diluted to 1.75%. TPG Capital, that is the main infuser of 460 crores back during the 2019, is still the major holder with 11.5% and has seen very low amount of dilution of around 4% in 2 years. Overall, public ownership has increased from 36 to around 40%, which is like all the decrease in other stake. The public stakeholders has increased. There has also been a lot of like changes in the expected uh, expected ownership. As you could see that Karuna Business Solution has been selling in the a lot of Solara in like June figure, and is like transferring its majority of its holding to Spiraka Ventures, as you could see in the like bulk deals figures. Now, R&D expense is one of the more critical aspects for a API company, because these companies always have a key risk that if they are not able to develop a new API, then their overall growth trajectory would like really fall down, because that's how these companies expand. The company overall has two R&D facilities that were mentioned before. They have spent around 55 crores ex depreciation on R&D on FY22, which is the company aims to increase. That is always the goal for a API company, so no major flag there. The company plans to invest in more in generic APIs, CRAMS R&D in the future, and in FY24, a polymer-based product is like expected to be launched from Kudalur side, and this is in line with the fact that they have also just recently got EU certification as well. The expected contribution from it is around 10 million USD in revenue. Now, moving forward to the financials of the company, as you would see since inception for FY18, the company has been around more than 1,200 crores sales figure. However, there is a very spike decline between FY21 and 22 in both the amount of sales as well as the gross margins. Pre FY22, the company had a margin of 40 to 45%, but in FY22, their margin contracted quite sharply, mainly because of the fact that in like December 21 quarter, their sales fell from 400 to 100 crores. This was done mainly by the fact that the company had a very like really high amount of is- uh, reversal of sales from all their like distributors, done because they changed their entire strategy from a distribution to directly consumer model. This change was like more or less justified by the company, because they said that in the long term we would be able to jump back and get the levels of sales back that they were pre FY22, that is like around 1600 crores. However, even like the recent year, since like around 6 quarters or so, the company hasn't been able to reach those levels back, and they are saying that they would be able to do that by Q3 FY24. The main like saving grace for the company here is that the Vizag plant has like started to come back, and the cram segment's growth is also expected. Now, the Vizag plant justification would be provided here. The main business of the company is profitable, as you could see that they are like having a good profit after tax, but this is XYZ. R&D investment, this is supposed to be present in every API company, because they are supposed to spend a lot on their R&D centers to like fuel their future growth. However, the Vizag-led business has been like the main dragger on the revenue. That, as you could see, that it has dragged the company's revenue quite a lot, and like company's EBITDA and after tax figures is also like quite high. This is like contribution of both R, and when you like combine both the figures, the company goes into like a significant loss of like around 22 crores. So now this plant is expected to do break even later this year, and if these figures go back to zero, the company is like expected to like rocket up in their profitability, which in the last 2 quarters has been seen for around like zero point 0.5 crores and cumulative 6 crore figures. As for debt to equity, the company has historically tried to maintain its debt to equity down before like less than one. There are no major changes like really expected except the figure to go a bit down. Further, there is like the current interest rate is around 8.79%. However, they have a very low interest to coverage ratio, which would be covered in valuation. The fact there is one more fact that is not mentioned here is the rights issue that the company has recently announced. That was like discussed with Nirvana sir before that they are also announcing a rights issue this year. So this figure is now like expected to go down if they use the rights issue proceeds to repay the debt. As for days of working capital, the company was in a good margin in FY 2019 and 20, but the number exceeded to like around 250 in the FY22, mainly because of their strategy change. And the management even now is not that efficient in like lowering this number, although they are trying to bring it down to like around 200 mark. But when compared to competitors, RT and IOL, their like numbers are 95 and 86 days of working capital, which is like almost half of even the updated figures. The company says that they would try to decrease it to 150 levels, but the expectations is not that high for this number. As for asset turnover, the gross block is like expected to increase had of 88 crores in FY21 and 22, and the capex of the company was around 80 crores. That is also for maintenance purposes and wouldn't like really affect this ratio. But in 2022, this ratio fell mainly because of the like uh, top figure, like revenue figure going down. The CFO reached quite a like bottom in FY22, and also same goes for PAT. However, as we can see that the company's like justification of it being a one time and overall contributing to company's long-term growth is starting to show signals, because the company has like almost pre-level pre-FY FY22 levels of CFO. Although PAT is like still below the like zero mark, but it's like starting to rise up. So Vizag recovery is also expected and has contributed a lot, as we had seen in the sales valley figures that in the company's loss making for 2 years. If you would see at the ROE and ROC figures, the company had showed a good ROE ROC figure and also had a like overall increase, but this fell in FY22, and this the company is now like trying to get back. As for there are no major changes in expected equity. However, this was before the fact that the company introduced about their rights issue. The right issue is expected for a face value of rupees 10, and the company would like have a overall spend of 450 crores in the rights issue for eligible equity holders, and this update was given on 5th July. And there's also a very high spike in volumes of sale for the company, which was covered in the first slide. As for a price to book and price to sales ratio, as company was like in loss making in the last 2 financial years, I haven't taken PE as a metric for this because a negative PE doesn't make any sense. As compared to the price to book, the main competitor is RT Pharma Labs, not RT Industries, because RT Industries has a lot of companies. So this is just a clarification for the same. Further, the company has been trying to like increase this price to book ratio, and as per their guidance they would be able to try to increase it to 1.1 or 1.2 in the recent like in FY22. But when compared to IOL, which is like the most direct comparison I could find, the IOL is trading at 1.5 and RT Pharma Labs is trading at 2. So when compared, they do look like a bit undervalued. And compared to price to sales, they don't seem to be quite undervalued, like except for RT Pharma Labs. The However, this number is also expected to like uh, rise a bit, even if the sales like, because the company has a good forward looking aspects, because they're already like down to around 350 or 370 stock price when they had an all time high of 1800 or something. Now I've tried to compare Solara versus IOL in their sales growth. As for that, the overall CAGR for IOL was 5 to 8% growth rate, and was supposed to be like with a consistent business model. The Solara does not had a consistent business model, but when if we like do a like to like comparison, the company is expected to give like 5 to 8% growth in their CAGR of sales in the subsequent years. As for like growth triggers, now the to like save some time, they have added more information for this in the note section if you would like to read. The CRAMS growth. Now, this is the segment that is contract research and manufacturing that they provide to other companies to use their facilities for the purpose of like manufacturing their good. This is a good forward-looking segment. This contributed to 5%, and the company is aiming to like 10% revenue growth and like upwards, like further than upwards from that. Solara also in their recent announcement, declared that they have gained access to the ibuprofen market in China, which is like the main API guy in the world, and the commercialization of it is expected to be like done in late FY24. The model changes of Solara were had like a rebound, and but now the results are starting to like show back, and that the ex company in the unregulated segment market, whose like stake was 30%, is starting to like rise. The price to book is also under than one, and re-rating is expected for the same. Now, to like solve the Vizag mystery, the Vizag is the Vishakhapatnam plant that the company back in 2019 started to form using the funds that the TPG infused. However, in September 2021, a major concern of qualities was issued by one of their major customers, and that led to a US FDA guideline violation and further investigation. This led to the plant being like completely shut down, and further, like now the plant is under recovery due to like being shut down for around a few like couple of quarters. There was like recovery and like maintenance as well as changes that were like recommended by the US FDA to be done, and is expected to now break even at Q3 FY24. This is a positive outlook because when we look at the sales figures, the company had a like very significant impact from the Vizag break even towards its overall profitability. And if this segment is even just breaks even, not even go into the profit, the company would have a good positive PAT figure. Now, as for key risks, the first is the pledge shares. It was covered in forensics, but the 41% or 40% of pledge shares, uh, for which no clear guidance was provided by the company, saying that there are personal and company investment reasons that were done from the pledge shares, does not provide any concrete evidence, and is one of the like red flags for the same. This is a very old aspect of the company, which is the intercorporate deposits. I have mentioned this because this does give some like highlight on the overall character of the management. Because back in FY22, there was a very high interest rates, intercorporate deposits that were taken from its parent company, that is Strides. And this was seen as one of the ways for the company to like take funds out of the company towards like the other company, and this was not like very much appreciated by any part of the shareholders, and has put a doubt on the overall character of the management on recording like on taking money out of the company. There is also fall in the credit rating to B triple from to triple B plus from A2, which would lead to an increase in their overall interest cost, and this has been seen in the last few quarters. There is also the inefficiencies that were showed by the working capital. In FY21, there was also an immediate withdrawal of all drugs that contained in ranitidine. This was one of the top 10 products for the company and also had like a inverse effect. However, this issue is not significantly impacting company, but does show that there is a major regulatory risk in the API and pharma sector in general. That covers the like overall presentation and story of the company. If you would like, I could go to valuation and yeah.
Sure.
Okay.
Just quickly, can you show the notes part? I mean, I'm curious what is over there.
So first is the main insights on the intercorporate deposits. It
Okay.
includes like what was the incorporate deposits, how your site hasn't tried to like take it back, and how they repaid it in FY22. So it's like the whole history on that. There is a CRAMS and management guidance on how growth of CRAMS would be done, and that would be brought in future of how this is a forward-looking segment. The geography-wise DMF filings on like Canada, USA with WHO, etc. There's also like a more of a detailed aspect on what the whole Visa versus US FDA thing was. I gave a main general aspect, but now it's like if you would see there is like a GMP violations that were found, and now the company has gained a GMP certification back. So it's like overall that. And then there is there are three subsidiaries, but they are not majorly contributing in anything in company. So it includes a bit about those subsidiaries, and that's pretty much it on the notes aspect.
Okay. Okay. Yeah. You can
So
jump to the valuation.
just a second. I hope my screen is visible.
Yes, it's loading. Yeah.
Yeah, visible.
Okay, so first is let me just see. I guess the latest number was 382, so I would just update that. First is like a valuation on Solara. I would try to cover the historical figures and reasoning behind some of those figures, and then would jump to the base year 2024 expectations on the basis of the triggers that I mentioned. First is that I have taken standalone figures for the same, although if you would look at the consolidated figures, there was not a major delta in the same, so I prefer to take the standalone ones here. The If you would see that there is a significant drop in revenue of like minus 21%, that was when the entirety of the model changes happened. Then the next part that is requires some insight is that there was a distribution and other cost that was given out 20%. I have taken up a division of 13 and 7% in manufacturing versus other costs. Then there was an operating profit. These are taken from the directly profit and loss statement instead of calculating them, because that would may give some discrepancy up and down due to this figure. Further, like the next part is the taxes aspect. That is, the company when it was profitable was not really paying any major taxes, but when it got into loss, it was paying like quite a significant amount of taxes, which is what I also covered in asked Gaurav sir about how there was a DTA reversal for the company, and now that is why they were paying such high taxes in the loss making years. And that's pretty much it on the old aspects. The rest are all these numbers that are present in the screen. As for the base case scenario, I have taken around 14% of expansion. The company was more aggressive on their like overall understanding that they would be able to increase to go back to 15-20%. But if you would see the 21 figures, they were also on the 1600 mark, and I have taken a figure that is roughly according to that, even after the rapid expansionist dysregulated markets, forward-looking cramps, and all those guidance that they were giving, trying to boost the investor expectations. I've tried to keep it in line with the overall PE levels for that. As for materials, I have taken an average of the past 4 years, not the 2021, because that there had a one-time impact, and that would not really give a fair image on how the company is managing their overall material cost, which came out to be 50.4%, and the number was then back calculated. Uh, Going forward, I have also taken similar approach for manufacturing costs, overall average for 4 years. However, this number I have taken to be around 15%, a bit on the downside. But if you would see at the sales that a 14% sales growth to a 15% ratio, I found it to be justified, because these companies are supposed to spend on R&D, and spending at least 15% of their revenue is more or less a given for these companies, because if they don't do that, there is not really any meaning behind their overall growth and forward looking figures. This figure was taken as on the face value of 7%, because I don't really expect the other costs to go significantly up or down if the overall prices and fuel prices remain consistent in line with the current levels. As for other income, when I looked at their CFO and other aspects, there was a 2.5 crore exchange rate fluctuation gain that they had realized in 2020, FY 2022. And however, I don't expect this to come back, and the rest of them were majority said by the company to be around normal operations and the investments that they have done. So that's why I've taken this number to be 20 crores. Now, as for interest expense, now I have tried to calculate the interest expense as per their guidance itself. The guidance for the company was that they would give repay 120 crores. However, when they in the recent con calls, as well as the readings on the value picker form, etc., I expect the numbers to be go down to 100 crores of repayment that they would do, and that too in the last quarter of the company, last quarter of the financial year, second last quarter of the financial year. However, the company is not expecting to take additional debt, and this was
Hello. I think he has a
Yeah, we
network problem.
lost Pratham.
He
Yeah.
had told me there were some network issues.
Okay, okay. Let's wait a little maybe for him to join back. But his numbers are pretty much so far in line with my numbers.
Right. Hey, Pratham.
Videsh, yeah, he's back.
Uh, Apologies,
Yes.
यहाँ पे the power in my like area got cut. If someone could like share the valuation sheet, I would just like give the rest of the insights.
Just a moment. You had shared it in the group, right?
Yeah, I did share it in the group.
Just a sec. I see both of them are granules. Did you share only granules, I guess?
नहीं, I
Oh,
did
no, no, no,
share.
no, no. I found the Solara. Yeah.
Yeah, it should be the last one ही अभी.
Mm-hmm. Moment. Sure. Do you see?
Yeah, if you could just go down to the interest wala segment. Yeah. So, yeah. So moving forward, like the in the expectations for the company to reduce debt of 100 crores, that too in FY20, like Q3 FY24. The overall like interest expense of the company was around 8.79%, but I have taken it to like around 9%. And based on their last X lease liabilities, is the I calculated like on the duration of one, because the company is not really expecting to take more debt on. So that these are the figures that I came up with. However, the 100 crores decrease in revenue at a 9% for in the last quarter is also expected. That is like 0.25. So if they pay it back, I have tried to reduce the 2.25 from the overall figure, and that's how I obtained 87.84. Moving forward to depreciation. Depreciation is the next line item on the like overall valuation of the company. The revenue numbers are taken from like the
Gaurav, you need to
estimated
move
figure.
up, I think, right? Or is it
Need
this
that.
one?
This is the one
Okay,
I
okay,
want to
okay.
see.
Fine, fine.
Yeah.
Yeah.
So this is the like work on revenue or work on depreciation. The net fixed assets here was like the major concern for me here was that the CWIP of the company, despite major capex, didn't really increase between FY22 and 23, which I also discussed with Nirvana sir. So I have like assumed the fact that all the CWIP would be realized on the net fixed assets, and on the basis of back calculation as well as historical depreciation, like percentage of net fixed assets, I have taken the depreciation to be around at 128.19 crores. So Gaurav sir, if you would move back to the depreciation line. Yeah. So on the basis of that, I have calculated PBT. And now the company gave a guidance of the taxes to be paid around 20 to 22% in the last con call. So, like ignoring any reversal of DTAs or DTLs, I have taken that number to be at its face value, which might lead to some discrepancies, but that's how I assumed it. So, on the basis of that, PAT was calculated. And the EPS of the company was 12.22. I calculated around a PE ratio for the company first, or the evaluation, but the PE ratio didn't make sense because the company was loss making in the last 2 years. So I have taken a price to book value approach. I estimated this number to be between 1.1 to 1.2, which is like more like on a higher level as compared to their current 0. I guess 8 or 0.9 levels. And a book value of 417 per share was given, on the basis of which, if you would just go down like another line item, on the basis of which I calculated a overall price of 500 for the like company, and I'm not expecting any dividends to be paid out because the company has like recently come out from loss. So that pretty much it covers the valuation. Any questions would be appreciated.
So how is the book value 417? That would be useful to. So that's the current book value, no? But
Yeah, on the current
1 year
basis.
out, you will need to add the profits generated to the book value to calculate the new book value, right?
Okay, I didn't. I take it at like the current values that were given.
Yeah, so I think that may need to be changed. And currently they are valued
So
at 0.9x book. Okay.
I wanted to ask one thing. So
Hmm.
like I would like take the pad that is like 43.99 that they generated,
and like discount, like take it per share, then add it and then calculate it, right?
Yeah, so there is another element that usually is adjusted before the pad goes to book value. Can any of you tell what that is? Ashutosh, Shantanu, Pratham. So, like, suppose book value at the end of FY22 was 1000, and in FY23 the profit was 100. So, the profit after tax. So, book value would not be 1100. It would be slightly less than 1100, depending on one more item. What would that be? So, after you generate PAT, does it completely go to book value, or does something get removed from it first?
The dividends paid, I
Yeah,
guess. I'm not.
absolutely. Absolutely. Dividends paid, but Solara, I think, hasn't paid dividends for the last two
Yeah,
years.
I'm not expecting the company that's like
Yeah,
6 crore profit in the last 2 quarters would to
agreed.
go really to dividends.
Agreed. So you can just, I think, add the PAT figure, yeah, and divide it by the number of shares to arrive at the price to book. Yeah.
Yeah, this was
So,
like my first time doing the PBV valuation, so I wasn't entirely sure how it would take. So
yeah.
yeah, I would just correct it. So
Yeah.
the
And
number is like
one
good.
more thing, one more
Yeah.
thing. Whenever you're doing a valuation, don't stop at any one valuation. Try to triangulate it with an EV EBITDA and price to sales valuation also. As in take a median of price to sales, see if they you expect them to reach median valuation or not, given the pessimism around the stock. Take that multiple, multiply it by your sales projection, right? That you've done, that is price to sales. Then EV EBITDA, also project the EBITDA, and then check what has been the median EV EBITDA margin, right? Then that way you multiply the EBITDA by the median EV EBITDA multiple, and then you get the EV. From that, you subtract the net debt to get the market cap and therefore the valuation. So, if you triangulate the price to book value with two other or at least one other, you will get much more confidence.
Okay, so I would like try to like do a three-way valuation and then give
Yeah.
you like a median figure for this.
Yeah. So what happens? What I like to do is I like to look at market cap. So for example, say the PB style gives me a market cap of say 2000 crore to 2400 crore. That's a range, right? Because my EBITDA margin assumption could be like 14% to 15%, right? There's a range. So the lower bound calculates a market cap, the upper bound calculates a market cap. Okay. Then suppose the price to sales gives a market cap value of 1800 crore to 2200 crore. So just remember these two figures. So price to sales starts from 1800, goes up to 2200. The price to book starts from 2000 and exceeds the 2200 and goes to 2400. So the entire valuation range for me is 1800 to 2400 crores. Yeah. So I know that's a pretty large range. There is a 30% variation between the two ends, but that is the nature of the job, right? So if I'm happy at 1800, like if the market cap goes to 1800, that makes me decent enough returns, then my job is done, right? So in this case, it would make me around say 30%, close to 30% returns, which is fair enough. So that is one approach you can take. You can just report the various valuation approaches and what market cap it is translating to. And once you've reported the three approaches and the three market cap ranges, you just take the mother market cap range, like what is the lowest among the three and what is the highest among the three. That is your overall sort of prediction range. Yeah.
That's like an interesting approach to look at it. I would like try to do this for Solara as well as like granules that I'm yet to present and then see to it like
Yeah.
क्या
So
range आती है मेरे
you
पास
can,
market में.
yeah, great. You can do it for Solara. So I will not share my notes with you right now because my notes has all these things. So you finish that, share the data with us, and then I'll share my notes with you because I want you to try it out first before sort of you look at my notes. Yeah.
Yeah.
Uh,
So like
but
could
my
you like give
numbers,
me
my
uh, s-
numbers overall, just to give you some feedback, are pretty similar to your numbers except the depreciation. I have, I think, underboiled the depreciation a little. My depreciation calculation for 2024 is 111 crores, which may be a little on the lower side. I would probably revise it up to 116 crores because I would not expect the CWIP to go into fixed asset from day one of FY24. I'll be surprised if that happens. I think it will happen gradually. So I'll probably take half of it to be depreciated over FY24. So that way, I'll reach around 116 crore depreciation. So that's the major difference from your approach. Plus, I have taken a range of gross margin from 48% to 50%. You've gone ahead. So management is guided for 50%, but I want to always check if management under delivers on their guidance, what will happen, right? So my range is 48 to 50, but otherwise it's pretty close. So you were on the right track, at least from my perspective in the valuation.
Yeah, the depreciation like really tripped me this time because the like in granules, if I would like show when I would share that I have done like CWIP time waiting as well. But in this aspect, like there was no increase, and then there
Yeah,
was a lot of capex. So like I even asked Yuki like how should I go about it. So
yeah,
yeah,
yeah.
that's why the CWIP is like a bit trippy here.
Yeah, no, that's fine. That's fine. I'm just telling you what I expect. So I expect half of it to be capitalized and depreciated. So that's why I would go with 116, but it's fine to have your assumption. So as long as, see, I can look at your report and I can adjust numbers upwards and downwards and have my own target figure in mind, right? As it is, your target figure of 500 is good enough. That's a 50% jump from here. But one lens I always try to put is I try to put the lens of market. Okay. So will market quickly revert back to median valuations for a company which has gone through such a bad year and still has one plant which is under US FDA lockdown, the Cuddalore plant, and it is only recovering gradually. So when I share my notes, you'll see that there are two cases. One case where market gives it the median valuation, and one case where market keeps it 10%, 15% below median because it needs more quarters of good performance to have that confidence back to give it the median valuation. Yeah. So
I mean, from a pure like human instinct perspective, wouldn't it be like the company has already reached rock bottom? So like there's only upwards that they could go.
yeah, but this promoter group also has a lot of hangups, huh? And your own rating of corporate governance, I have never seen a company receive 50% score. So yours was the lowest that I have come across in all the presentations that Shantanu and everybody else have done over the years, over the months. So there are concerns, corporate governance concerns about this company. Uh, Again, Pratham, that is one more layer of conservatism that I'm putting on the numbers, right? I might as well not put it and therefore have higher expectations from my portfolio stock. But it's just um, call it an experience layer that I'm trying to put. I might as well be wrong. Yeah. But if I had to take a guess, if I had to assign probabilities, whether it'll get median or it'll fall short of median even after performing, I'd probably give it a 50-50 probability. So it won't be 100% ki median mil hi jayega. That's the perspective I'm explaining. It's perfectly fine to not have that perspective. It'll
Mhm.
only come with experience, and with experience also you may arrive at a different conclusion than I have. Not to say that I have any great experience in pharma. I'm also pretty much a novice. But generally, market, once a market decimates a stock like it did Solara, it means that not only has business collapsed, but markets confidence in the business has also collapsed, right? So it usually takes about 1 year for market to give back that kind of confidence. So you're right, 1 year has probably happened. Q1 was the disastrous quarter, right? Last year. So
The disaster is right. Like it all started going down
sorry,
in like
Q4.
that December that I
Yeah,
mentioned,
correct, correct.
which had
Q4.
like 100 crores of sales, and uske baad to they were like
Correct.
just
Correct. So 1 year is done. So maybe you'll be proven right that they'll get median, but yeah, it's just a additional layer of conservatism. So Gaurav, I would like to hear your views. Like this is, I think, you're interested in the company, and this is
Mhm.
the first time you're looking at an analysis. I think so. What do you think about the prospects?
So overall, I think I was looking at this number, the revenue with respect to the Vizag plant opening up. So it will come down to almost 16,145, 2024, right?
yeah, the
Uh,
plant is like expected to, in my opinion, the if they're like that would affect the profitability, but like I
no,
expect the sales to grow for the company.
by
No,
2025 end, I wanted to know by 2025 quarter four, what would be, in your opinion, the revenue number?
Yeah, will be
The
interesting for Solara. You can try to do that, Pratham, for one more
I
year
could
because
try to, yeah. I was thinking
because
I could do that because at this point, if I would just to give you a random number, I could say 2000 crores, but I don't really expect them to like reach that mark
because
because
there's
वो
an
reach
additional trigger, right? There's the Cuddalore plant trigger which will play out
Mm,
for a 2 year horizon, right? Because that plant is right now shut down.
I think gained the CEP approval in back in February, but they are like, yeah. But there's like a lot of issues with Solara, to be honest. So that's where the final call that I was going to give on the company was ki, like, let's just wait till like August end or September beginning to see how their financials come out and how they are like doing in the first quarter. That was like supposed to be my end call on the company.
Yeah, I think that's pretty fair.
Yeah,
I was actually surprised with the value. I mean, the forensic checklist. Not very. Uh,
yeah. Scary forensics.
yeah, exactly.
Yeah. No, Arun Kumar's groups are not known for good corporate governance. So only reason I'm invested in Solara is because I think valuations are just in our favor and business is recovering. So I'll make my money and go out here. This is not going to be a long-term stock. So
Yeah.
because I don't think his companies are known for great corporate governance.
So
Stride, Solara, all these companies have issues.
Like I found a report on like the overall Solara Pari, and they the guy that mentioned he like Arun Kumar is known for making like deals and just selling the companies
Yeah,
फटाफट.
yeah, yeah.
To yeah. So अगर वो sell करेगा Solara, so I don't mind taking a cut from it. So yeah.
Yeah, no, Solara getting sold will be a good to a good promoter will be a good news for shareholders.
Uh, so like any feedbacks on the like presentation, any area that I could improve, except like the valuation where it is that I have to revise and give you a 25 figures be. So yeah.
overall, the presentation was very crisp and precise. I really enjoyed it. I mean, you got my attention for the entire time. Generally, yeah. I mean, if it drags on, sometimes I just lose it. There's too many things happening.
Yeah, same here. I think, Pratham, I must commend you on your ability to understand the broad contours of new businesses in new industries. I think it is not easy, as you know, we are seeing other interns also presenting. Often understanding a new business. This was your first pharma company analysis?
Sort of second, like there was Vikram Thermo, so a
Vikram
bit
Thermo
background.
at the beginning,
Vikram.
yeah. But I think your ability to grasp the key points quickly and try to present it in a story format, that you have a good knack for that. So keep sharpening that. And I think a lot of hours go behind this presentation. That is what I feel. Otherwise, this kind of coherent presentation, which somebody who has looked at a company like me also finds in line with their thoughts or interesting, it will not happen. So I think you're doing a good job, Pratham. Keep doing it and keep sharpening your tool set. I also like the fact that you ask a lot of questions wherever you have doubts, and I encourage everybody else to also do the same. Ask very specific doubts. Pratham asks very specific doubts where he's not able to solve a problem. For example, depreciation, he doesn't know how to model. So that's the question. Yeah. Or another aspect, CWIP, why it's not moving out. So those are very specific things that I can help you guys with, rather than a very generic thing like here's the presentation, give me feedback on it. Yeah. So yeah, I think a lot of things are going well, Pratham. So I would urge you to keep it up.
Gaurav sir, any feedback? Any like I'm more like looking at the areas of I could like make much better than this आगे की presentations में.
No, I think more or less it's a benchmark for me as well. Pretty good.
So
If
yeah.
there's feedback for improvement, there's marked feedback for improvement, you'll get that, Pratham. So whenever I see there's scope for improvement, scope for telling somebody that they can improve somewhere, you will get it. So I think so far it's been fine. So nothing of that sort. So don't worry if we notice areas where you need to improve, you will get that information.
So yeah, that pretty much like wraps on Solara. If you guys want, I could present granules. मेरे यहाँ पे Power B is also back.
No,
Gaurav,
let's
your call. I think.
plan for next
Yeah, let's plan for the next
next
session.
cycle. Yeah,
Okay. So, as for like Gaurav sir, I informed you like I have to go to college then. So that's
sure, sure,
tomorrow.
sure,
So I would be on leave. So
sure.
yeah.
No problem. Tomorrow, I think Sonakshi is presenting.
Yeah, Sonakshi is presenting. I'll try